Hello everyone, and welcome to our financial and economic analysis of Microsoft. In today's analysis, we will show you how Microsoft increases shareholder value through substantial stock repurchases, and here's how. First, Microsoft's net income has increased over threefold between 2013 and 2022, from $22 billion to $73 billion respectively. As we've discussed in a previous presentation, we are forecasting Microsoft to earn $86 billion of net income in 2023. The big bump between 2020 and 2021 was spurred by COVID-19, causing lockdown consumers to accelerate use of electronic devices using Microsoft's products. Second, Microsoft returns net income or equity to its shareholders principally through two mechanisms. The first mechanism is that Microsoft pays a quarterly dividend, which is noted in the bottom of the bars in black, and has averaged between $8 billion and $18 billion per year over the last 10 years. As you may know, dividends are cash payments that go from the company directly back to shareholders. The downside of a dividend payment is that they are typically taxed. This results in what is known as double taxation. Double taxation occurs when Microsoft's earnings are taxed at the corporate level and dividend payments are taxed on the individual level as well. Second mechanism is that Microsoft repurchases its own stock in the open market, which is noted in the top of the bars in gray, and has averaged around $30 billion in repurchases in 2021 and 2022. Stock buybacks result in fewer shares of stock trading in the marketplace, which in turn increases stock price if demand for the stock remains constant. The double taxation issue is one reason why Microsoft uses stock repurchases to reward shareholders. Accordingly, Microsoft has returned an astounding amount of equity to shareholders in the form of dividends and stock repurchases. In total, between 2013 and 2022, Microsoft has returned $294 billion in equity to shareholders in the form of both dividends and stock repurchases. In comparison, Apple returned more than twice the equity than Microsoft did in the same time period at $675 billion. Third, Microsoft's stock repurchases have resulted in outstanding shares of stock in the marketplace decreasing by 11% from about 8.5 billion shares in 2013 to 7.5 billion shares in 2022. As we discussed in a previous presentation, we expect Microsoft to continue to repurchase stock, resulting in 7.4 billion shares of stock outstanding in 2023. Fourth, the result of Microsoft's increasing net income and decreasing number of outstanding shares has been to increase earnings per share by 275% from $2.58 per share in 2013 to $9.65 a share in 2022. Earnings per share is simply the income of the company divided by the number of its outstanding shares in the marketplace. This is an impressive rise in earnings per share, and as we've discussed in a previous presentation, we are forecasting Microsoft to earn an additional $11.49 per share in 2023. The stock market looks at earnings per share as a leading indicator of a company's profitability. Accordingly, Microsoft's substantial increase in earnings per share has translated into a substantial rise in Microsoft's stock price from around $25 per share in 2013 to around $260 per share as of September 2022. And again, as we've discussed in a previous video, we are forecasting Microsoft's stock price to rise to $291 in 2023. In conclusion, when Microsoft buys back its own stock, it reduces the number of shares outstanding. This helps boost earnings growth since each remaining share captures a greater percentage of Microsoft's earnings. And higher earnings typically lead to higher share prices over time. Thank you for watching, and please subscribe, like, comment, and share. Please also pause this presentation and review the disclaimer before you acquire any stock.